Everybody, this is Dr. Tom Carr, aka Dr. Stocks of drstocks.com. That's drstoxx.com. And if you go to our website, you can join me and a whole bunch of great traders in the live options room. That's where this is coming to you from today. You could go to the subscribe menu, scroll down to the live options room. We only trade calls and puts, and we do a spread every now and then. We sell some premium every now and then. But for the most part, it's long calls and long puts. And if that's of interest to you, join the room. And if you add on our shares, stocks, ETFs, micro e-minis room, that's the original room, the live trading room, you can join that for a 40% discount. And if you're looking for daily or weekly stock advisory letters, click on that right there. All right, let's get down to business because I don't have a whole lot of time. The market's been doing some interesting things, shall we say, over the last 4 trading sessions. We had the big flash crash on Friday for a pretty legitimate reason, and that is that Trump came out and said, hey, everything's going wrong with China. I'm going to delay my meeting. I'm going to add 100% tariffs to Chinese goods. Of course, as all of us who have been watching Trump for the last year and a half of his presidency knows, these are negotiating tactics, and they're not something to jump out of the market over. And everybody was right back up again on Monday after the people came to their senses over the weekend. We did a little bit of nibbling down here at the close on Friday. I'm happy to say we put on some QQQ and added a little bit of shares to some of our open positions. Saw a nice rally back up. Did not sell yesterday, even though there was a gap closing event. So this is what I really like about what happened yesterday. We gapped up on Monday, which was the right thing for the market to do because there was really no reason to sell. We closed down into that gap. And when you close a gap, especially one that's down below, you put a very strong line of support underneath current price, which is exactly what happened yesterday. We gapped up a little bit today. We did sell back down to close today's gap. That just happened. Why? Because Trump is out again, or maybe it wasn't Trump. It was his Treasury Secretary out with some potentially negative comments about China. It's kind of unclear what he said. And that caused the market to close that gap and then right back up again. Why? Because everybody and their mother knows that when Trump is negotiating about China and he's telling his Treasury Secretary what to do, it is part of the art of the deal, right? And these are buying opportunities. Algorithms, they focus on algorithmic trading. They focus on these headlines, and as soon as a negative headline hits the tape, they push the price down by with high frequency trading, just one after the other. Lots of volume going in, billions of dollars go into these algo programs. And then when it hits a certain level, they switch from bearish to bullish, and then it's right back up again. Now, I want to show you something real quick. I'm going to bring over here a 5-minute chart of the Qs, right? This is a 5-minute chart of the Qs. And let me see if I can, let me do this real quick. I want to make a screenshot of this. Did that work? Never mind. Anyway, here's the thing that I'm talking about. I do not have a drawing tool for this. So here's the flash crash that happened just an hour, 2 hours ago on that Treasury Secretary comment. You could see the volume picking up, right? These are algo programs kicking in, flushing the market with all kinds of sell pressure, and then it kicks out all the weak hands. So the people that aren't really figuring out what's going on, maybe they bought up here, right? They bought on the breakout, or they bought the dip down here, and now suddenly all those guys are underwater. So they start selling, adding to the selling pressure, and or they start putting on QQQ puts, or they start shorting Apple and Microsoft, or whatever, right? They're doing whatever they can to try to protect their capital. And that answers the reason why we sold so sharply so quickly, right? 3 5-minute bars in a row, very sharp selling on increasing volume. And then here's the you can tell right away. This is where the algo program switched from from bearish to bullish on that green candle right there, right? Big green stick, big volume. Now everybody's flooding back in. The people that sold, the weak hands, they're out, right? They're on the sidelines and they're going to be kicking themselves probably in a few days when the market's back up to all-time highs. Um, and I'm not shaming them by any means. I was one of those guys myself 20 years ago, trading that way. But once you've been around the block a few times, you kind of know to recognize these prints, right? Increasing volume on the way down, and then massive volume with a reversal bar back up. That's where the bottom lies. 596 was support a few days ago. It was support again today. 600, a nice round number. We want to stay above that into the close today. And I think if we do, we'll get pretty good trending up action tomorrow and Friday into the weekend. We're printing a nice little bull flag right here just above 601. There is some resistance around 603. You can see all the resistance right here. And then it was support. And then it was resistance again, 603.40. We don't have to peg it to the penny, but it's between 603 and 604. I don't think we'll get above that level today. There's just a little bit too much uncertainty out there. But if we did, it would be very positive, very bullish for the market. If we close anywhere between 601 and 603, I'm happy with that. And I think we'll take out 604 tomorrow and then 607 by Friday. And next week we should be at all-time highs, 611, 612, something like that. Okay. So now, all of what I just said is completely contingent on a normal macro environment going on behind the scenes. And so any tweet from Trump, any major miss from some of the big banks that are reporting tonight and tomorrow, any other problem going on with the government shutdown and that effect on the economy, anything can still happen. We do have to be cautious, as always. And as I always say, we trade one day at a time. But I just have to say, the market action of the last 4 days, including today, bullish, right? Bullish, not bearish, bullish. Okay. Now let's drill down to the 1 hour chart, blow things up a little bit. You can see some of those movements, right? So here's the big flash crash on Friday. Totally overdone. Way overdone. Perfect buying opportunity. Now, as a trader, my risk tolerance is pretty low, so I tend not to jump on these kinds of things with a whole lot of size, but I did buy, and thankfully I did, some TQQQ and a pretty good chunk of it right at the close on Friday. And, it's up. I bought it down here, and now we're up here. So we're still in pretty good shape with that, and I don't have any plans to sell it anytime real soon. I do hope to hold it into the end of the month. And I think we'll be at all-time highs. So here's that gap up. That's the inside day bar. Not a big range of trading that day, and there was no close of that gap, and there wasn't much pressing above the 21 EMA on the hourly chart. Kind of got stuck there and stalled out, and we had about 4 or 5 hours of flat trading on Monday. Then we had this, excuse me, we had a gap down, and it was a pretty sizable gap down of 1.2% or so for the NASDAQ, 1.5% or so for the Russell 2000 small cap index. But all the action that we needed to see as bulls took place in that first hour, right? Gap down, flush out of weak hands, testing near the low, but just above it, just enough to keep the bulls happy, near the low of Friday, which is kind of like a way of saying, hey, we're going to test that low again, just to make sure that the big money traders that weren't able to get on board Friday can get back on board here on Tuesday. And then it was just upside all the rest of the day. We had a little bit of a scary pullback into the last part of the day, but it was a gap up. Then we had the couple hours of selling on this tweet from the Treasury Secretary, and now we're bouncing right back up again. And again, anything over 600 today is gold for the bulls. Anything above 603 is really good. I don't think we're going to get there, but we're already at 602. So we're not that far away, and we still have an hour and a half of trading. 607 is going to be the next level, and then the all-time highs are up here around 612 and change. I think will be 612, 614, 615 next week sometime, and I think it'll be consistently not in a straight line, not in a momentum kind of run, but consistently higher into the end of the month. Okay, so that's QQQ. That's all I wanted to say about the indexes. Just pretty much still just stay the course, right? All right, now let's take a look at some greens on my greens list. So this is a list that I keep where these are stocks that I'm generally interested in anyway, but they're also setting up or potentially setting up or close to setting up a nice buy signal, right? The kind of buy signals I like. I'm mostly a pullback trader. That was the first trading setup I learned. It's my bread and butter. It is my favorite setup. Usually, a pullback means that you're in an uptrend, but then the market has cooled off a little bit. The stock has cooled off a little bit. It's pulled back down in a soft sort of way to place of support. You can see the flip between the bearish print and the bullish reversal. And once you see that, that's your buy signal to get in. And I have a whole trading system built around that. If you're interested, you can go to drstocks.com and you'll find the pullback webinar. That's the one that you'd want. Okay, so let's take a look at these. Now, we also trade breakouts. We also trade consolidation. We trade trading support and resistance in a trading range. There are all kinds of ways of skinning the cat when it comes to trading, but my favorite setup is the pullback. All right, let's take a look. So a lot of these are pullbacks, but let's get back to the daily chart. And I don't know if we have time to go through all of these, but I'll try to do as many as I can, and then I'll look at your chart requests. So LHX is a defense play, defense contractor, big one, right? One of the big three, I think. And I noted that Kathy Wood's, one of her ARK funds was out buying in size yesterday. So I'm hoping she's out there buying more today because it was a big, scary drop down. But here's the pattern that I'm looking at, right? So this is a bullish pattern. You are in an uptrend. You've got the 21 EMA, that's the blue line above the 50 EMA, that's the black line, and the 200 is way down there. The LRC, the linear regression channel, it's a 100 period look back. It's a 2.0 standard deviation plus a 1.5 standard deviation, which gives me this nice pink band down below and a powder blue up on top. And as long as that is trending higher, we're in an uptrend. And my mantra is you buy the pink in an uptrend, you sell the blue in a downtrend. So we're down here in the pink. It's not a buy today, but I like the fact that it got near the 50, bounced right back up again. We're within the wedge. And one to watch for a reversal tomorrow, but I'm not buying it today. I'm not even interested in it here at all. Joby is one we played right in this little pivot right here, little pocket pivot. So here was the pattern, right? The pattern looked like that, and it was starting to accumulate on increasing volume underneath that line. That's where we bought it. And then we enjoyed this nice 3-bar breakout. Fortunately, we sold because it was right back down again. And now I think it's setting up for a potential second leg higher on this little pattern. I'm not so sure I'm interested in it where it is right now. I'd like to see it come back down to the 21 EMA and then reverse and give us a nice green bar. But here's the thing. Look at these big volume sticks. This is people getting into the stock, not coming out of the stock. How do I know that? Because all the volume is pushing the close of that bar above the open. That means they're buying all day long. Right? There's more buyers than sellers on that particular day. Yeah, it was a big gap down, but that means people are rushing in to either add to or build new positions in this. And the same thing happened on that little inside day bar, and the same thing happened yesterday. Big volume. So that's worth something. Keep an eye on this one. Likely will print a good big leg higher. PLTR, it is doing this pattern, right? So I don't do a whole lot with ordinary patterns like head and shoulders and double bottoms and things like that. I certainly don't worry at all about head and shoulder tops, one of the most unreliable patterns out there. But the cup and handle pattern at the top of an uptrend, which is a continuation pattern, is one of the most reliable. And so when you see it, pay attention to it. It is setting up nicely for a good run higher. A couple of things I don't like here. Recent volume balance has been a bit mixed. The long term cycle, which is that purple line there, is up at the top and it's starting to roll over. I would like to see that come down a little bit more. So maybe a week from now, we can take a look at PLTR. I did nibble a little bit on UNH this morning, and it hasn't done much for me just yet. But it's UNH, so it's way over undervalued, and it's way off the all-time highs. And I think all the bad news is already priced in, and it likely will do something pretty well between now and earnings. And this is the pattern, right? Rounded bottom. These are called scallop bottoms, and they keep getting higher and higher, and that is a very bullish repeating pattern. And we're now in one of the scallop bottoms again. So you can buy it here, as I did, and let it run up. And where is it going to go? Well, probably not too much higher. Probably going to run up into the blue zone and tag that maybe 390. Okay, this is a Chinese play, pullback setup. Hasn't given us a buy signal just yet, but there's your resistance line. We are long SOFI already in the options room, and so far so good, but it hasn't really gotten much beyond the big stick that it gave us yesterday. We're long Tesla in the live trading room, and it is a nice looking pullback. It's not the most bullish chart out there, but it is kind of a rounded bottom nearing a breakout to the upside. I don't think I'd hold it over earnings. I do have a long-term position in Tesla, which I will hold over earnings, but not the short-term trade. TSEM is a very well, okay, lots of mess here. TSEM is a semiconductor play and one of the top rated ones, but it's kind of under the radar, not really on a lot of people's on their watch list. This is a very good setup. Big bullish green bar off the 21 yesterday, some follow through today, just peeking out above the RTL. Maybe not quite ready to go yet, but it's one that's close. I don't have a position. Pony is not ready to go yet. Still too many red bars forming here, but that's the RTL. Dash was also on Kathy's radar yesterday. She bought a big chunk. I like what it's doing here with this little pullback under the RTL. We went long shop today in the options room. Nice reversal out of the pink zone, off of the support line, out 50 period moving average test, back up above the 21 EMA today. Volume's been a little light. It's been light across the board in everything. Everybody's just kind of hanging out on the sidelines today. Not a whole lot of real heavy commitment, but this one looks good. Maybe not like it's immediately going to go up. It might need to churn around a little bit more, but anything above the 50 period moving average from where it is now, I think is a good play. You gave us a little bit of a peek out yesterday, and then confirming the breakout today. It's probably going to take some time to get on board, but we're long U calls following a lot of flow into the name. I nibbled a little bit on app yesterday right there. I like what I see so far today. It has to get up above that 21 EMA, and volume has been really light. So I'm kind of waiting to make that official with some more volume, some better volume, better price movement. We're not there yet. We went long Google in the other room on this little breakout play. Volume's been pretty good. Look how the long-term cycle and your major midterm cycle are all both bottoming at the same time. That's very good. Usually when you see that happen, you get several weeks going forward of positive price movement. We're long ARQT. It's a biotech firm, and in the other room, the live trading room, we bought it this morning. It's off to the races. I like that one a lot. Nice little flag pattern. We bought Serve yesterday when it was down here in the other room. We bought Serve down here near the open yesterday, and it closed very strongly, and now it has gapped up above. It did get all the way out to major multi-month highs, has pulled back in as the market was coming down, right? Everything was kind of coming down for a couple hours, and now holding at the breakout. So I like that one. SSRM is a mining play. We're long this one in the other room, and it's doing really well, right? We bought it down here in this little, I don't know what you would call this, maybe a pocket pivot. The increasing volume yesterday was a tip off for me. The cycles are all down where you would want them to be, right, all the way down to the bottom and starting to curl higher. And yesterday was a perfect setup, and it was right at that RTL, and it's bye bye RTL today. One of the strongest stocks on my watch list today. And I just nibbled a little bit on this guy. This is a forget what it is, semiconductor maybe. I'm not sure. Electronics. I did some research on this company, but it's now jumbled in my mind and I've lost it. So it is right at the 21. It is in the pink zone. It's a 3-bar reversal out of an uptrending market, and you're just about to get a MACD buy signal as well. The long-term trend is higher. The midterm trend is still falling. That's not so good. So it probably takes a little while for it to really get going, but I think this one will. All right, guys, I'm going to see what you are interested in. So let me scroll up and see if I can find, I see a couple of ticker symbols here. You can type in more if you want to. All right, well, I don't know this company, Environmental Group. If this is a farming company, then that sector has been looking pretty good lately. So we were just talking about this pattern. I mean, here's that pattern, right? Just a bunch of highs, keeps hitting that level right around 31, pulls back down again. But if we look at a line over the closing prices, then we get this look, which is where it was yesterday on the breakout with big volume. And look at the cycles. All have bottomed out and starting to rise again. That looks good. Volume yesterday was great. Fresh MACD buy signal. If you bought yesterday, pat yourself on the back. That was perfect timing. It's doing a little bit of back and fill today, but I have this rule, right? I call it the big green stick rule. When you see a big green stick, you don't buy it at the top. You wait for the next day or two. Typically get better prices on what I call back and fill, right? Just the way of market kind of testing some of the intraday lows that are out there. And here, in this case, testing that resistance trend line from the top, this time not from underneath. No, this looks good. It is. You could buy it here. If you bought it yesterday, it's certainly a hold. And I would just keep trailing my stop up, maybe underneath the previous day's low. So you'd have your stop at 27.89 now, and then you would put your stop at around 28.80 tomorrow, something like that. Yeah, I do like that one. I know nothing about the company, however, but I like the chart. UAMY. All right. Well, hopefully you got out of this one if you had profits. Not yet a buy, of course, because it's still falling, and momentum stocks like this can fall just as fast and even faster than they rise. So let's look at this chart though, because it is instructive on how to play these kinds of stocks. So you're going to get a momentum move like this. This is actually quite a nice one because let me zoom in a little bit here. Yeah, what you want to see in any stock, frankly, but especially in momentum stocks, are these rounded bottoms. You can get a V bottom like this, but these rounded bottoms are very bullish, and they tend to mark a line in the sand for a long time, if ever stock ever comes down there again. So this is a big momentum move out of the rounded bottom. There's your buy signal right there, that green bar. And you could have gotten a little bit earlier. This one actually is, that one right there, pretty good because it has bigger volume than the day before. This is your breakout bar on heavy volume, and then it's, you're down here at 480, and you could have gotten out at 790. That's a huge, 50% run, something like that. Now, the next buy signal was on that bar right there. Pull back above the 21, gap up, big volume, nice bullish print, highest close in several months, and then it was really off to the races. That was the beginning of a big Momo print. So 720 on up to 19, almost 20. Now you're getting you're getting all those guys. So you probably got a bunch of guys that bought, right? Heavy volume. They bought up here thinking this was just going to keep going higher. They bought right off the open at 19 and change. And then they're selling all day long. And then you get guys who bought the dip toward the end of the day, and then it gaps down and they're underwater, so they're selling all day long. And then you're going to get the guys that bought on this day selling today, and the guys that bought on this day are going to sell if it gets down any further. So yeah, it's a no-go zone for now. The only thing that you can do with a chart like this, if you're looking for an entry you're not already in, is to drill down to something like the hourly chart, and you play the hourly chart. You're not playing the daily chart, so you're not looking for it to go back up to 19 or 20. Now, if we look at the hourly chart, it's not horrible here, right? There is a big gap down, but it is down in the pink zone of an uptrending LRC. The 21 is above the 50. The 200 is above the 50. So in the intermediate term, it's not so good. Your cycles are bottoming out down here, which is good, very good actually. And you're getting a little bit of a reversal bar on the hourly chart. Okay, so if you want to nibble down here at 1320, I'm not going to kick you in the pants for that, but to keep in mind, it's not likely going to get above 16 anytime real soon. And if it gets anywhere near that, it's probably going to reverse and then print another leg lower. So you can trade this little bounce, trade it as a bounce, but put your stop pretty tight. I would put my stop down at around 1240, 1230, something like that. Got to give it a little room. And but don't trade that daily chart. The daily chart is a disaster over the next week or so, and then let that play out. All right, let me see if I can find one more. Well, BTC, I guess Derek is looking at. All right, yeah. So I'm very interested in getting back into Bitcoin, and I did nibble a little bit, and I'm underwater. I nibbled a little bit yesterday on Ether, and I do think, let's get back to the daily chart. I do think that we are very close to a tradable bottom in Bitcoin and a longer term bottom in Ether. So I think Bitcoin is going to be a trading vehicle for the next several months. But Ether, I think, could in fact be a multi-year investment for several years. So 4,000 Ether, and then if you're looking at BTC.x, you're looking at what is it now? 110. Let me see where Bitcoin is. 111. So 111 change. All right, let's use this chart then. So there's a lot of support down here, right? There's a lot of support. It tested it yesterday and bounced. Tested it today and held, has bounced weekly off of that level. I'm not convinced that it's going to hold this time. So it may, but I do think that it's probably going to dip below 110. And then at that point, we need to see it prove itself. We need to see it climb back up above the support lows and give us good volume. Why do I say that? Well, in part, I say that because the volume balance down here is not that great, right? It's the last 6-7 trading days. It's been about distribution. People are getting out of Bitcoin, not piling in. You've got the long-term and the medium-term waves have topped out and they're starting to fall. That's not so good. You've got a MACD sell signal there. That's not so good. So I just have my doubts about this holding. It might, and I do want to get back in. I'm just waiting. I'm just waiting on that one. And we do have a position in IBIT in the other room. It's a long-term position and we're well above our entry price. So don't mind holding that kind of thing. But for a new trade, I think we just need to wait a little bit. Ether's kind of similar story, but it's a lot stronger of a chart. You're up much higher above the lows. You're going sideways rather than trending lower. And yes, it is looking ugly in recent trade. That needs to correct itself. I'm not interested in Ether just yet. I did nibble, but that was a nibble. And I'm just a little bit under my entry price on that. All right, let's see what else. Okay, I don't think you're all interested in anything else, so I'm going to wrap it up here. I will produce this, put a link in the main room, and we'll get back to trading the last hour. God bless everybody. Have a great rest of the afternoon. We'll see you in the room in just a little bit.